We begin the recording process. Your speaker today is Stephen Bland. Stephen is the Education Director for the West Michigan chapter of the Association of Government Accountants and is a principal at Raymond, where he serves as the firm's Director of Governmental Audit Quality. Stephen is a CPA and a certified government financial manager with 25 years of experience in the governmental and nonprofit arena. He's a member of the AICPA's Government Audit Quality Center Executive Committee. And with that, we are happy to hand over today's presentation to you, Stephen.
All right, thank you very much and welcome everybody. So I was flipping through my notes and believe it or not, this is our 10th annual single audit update that we've done with the AGA West Michigan and Raymond working together, and delighted to have such a large audience joining us today. So we are going to cover a little bit of basics and a lot of new stuff, both over the next couple of CPE hours. We're going to start with a fairly quick overview of the components of a single audit. No major change there. It's just helpful to put everything into context each year as we're talking about what's new. It helps to kind of have a touchstone of what's still the same from the past. Then we're going to be running through the major provisions of the uniform guidance as they relate to the single audit. We're going to talk specifically about the forthcoming, I wish I could say the already issued, but the forthcoming 2020 compliance supplement and the also forthcoming COVID-19 addendum that's expected later this fall. The OMB has issued several different memos in response to the COVID-19 situation, and so we'll walk you through some of the interim guidance that's been issued for those and what the impact is on the single audit. We'll talk a little bit about the data collection form and the impacts that it has had relative to COVID-19 as well. And then just as a reminder, we've been mentioning this the last couple of years, but the 2018 Yellow Book actually becomes effective this summer with June 30, 2020 fiscal year end audits. So while not the primary focus of today's training, we do at least want to remind everyone that that guidance now becomes effective and what we need to do relative to it. So let's go ahead and dive into the content of today's update. The first thing I want to remind us of all is what we mean when we talk about a single audit. Of course, most of you know that the term single audit comes from the fact that many years ago, governments and nonprofits and colleges and universities, when they received federal funds from a variety of federal agencies, they got audited by a variety of federal agencies. And the idea of the Single Audit Act of 1984 and the subsequent amendments in 1996 was to take all of those audit requirements and put them under a single umbrella so that organizations could be audited once instead of many times, and those results could be shared with various federal agencies. Now, of course, that doesn't completely eliminate recipient monitoring and federal monitoring visits and everything else that goes into that, but it does give us one common framework for the vast majority of the audit work that covers the vast amount of dollars that the federal government gives to the states and the states give to local units and nonprofits. So a single audit is actually an umbrella that ties together three components. The first is a financial statement audit, or an audit of the financial statements. That's conducted in accordance with generally accepted auditing standards, or GAAS. In addition to that, the financial statement audit is conducted in accordance with government auditing standards, which is also goes by its acronym GAAS, or Generally Accepted Government Auditing Standards, but is more commonly referred to as the Yellow Book. Now, you can have a financial statement audit all by itself that's not a Yellow Book audit, but you can't have a Yellow Book audit that doesn't build on that foundation of a financial statement audit. And then to make it a single audit, we go one step further and add to a financial statement audit conducted in accordance with the Yellow Book, a compliance audit on the federal awards that have been received. That's in accordance with a uniform guidance. We might refer to that as 2 CFR 200. You might even refer to it as just the Single Audit Act. We're all referring to the same thing. So let's briefly look at what each of those three components should include. A financial statement audit is resulting in an opinion from the auditor on whether the financial statements are fairly presented in accordance with generally accepted accounting principles. Basically, and I believe it or not, was just trying to describe this to my 10-year-old son earlier today. He asked, what exactly is an audit again? I said, well, businesses, organizations, governments, nonprofits, they have to keep track of their money. And management has to report on how much money they brought in, how much money they paid out, what do they have, what do they owe, basically all the things that go into financial statements. And so I asked my 10-year-old, I said, what do you think? Is there a chance that someone would ever have an incentive to try and report something other than the truth when they're being asked to put a report out on how good of a job they did taking care of the money? And even my 10-year-old quickly saw the answer to that. Well, yeah, people might want to try and make the numbers look different than they really are. That's what an audit's all about, an independent person coming in and verifying the accuracy of the financial data. Now, we couch that in fancy auditor speak. We talk about being fairly presented in all material respects, following generally accepted accounting principles, but it all comes down to one bottom line. Are the financial statements something that elected board members, those charged with governance, can they rely on these numbers? Are they accurate enough to make good financial decisions? Well, that's a financial audit. And those happen outside of the government and nonprofit and higher ed space as well, but they definitely happen in this public sector that we're focusing on today. Well, a financial statement audit is great, and it helps answer a very important question. Are the financial statements fairly presented? But there's more to it than just that. And so the Yellow Book, Government Auditing Standards, builds on that foundation, but it adds an additional report. It's not technically an opinion, but it's a report from the auditor on any matters that came to the auditor's attention related to internal control over financial reporting. Again, I was having this conversation with my 10-year-old today, and I said, part of what an auditor does is say, we need to make sure that there's a good system to keep good financial records. I used a very silly example with him, but I think it illustrates the point. He has to keep track of the chores he does in order to earn his allowance. And I said, what if instead of writing down the chores that you did, you decided to keep track of what chores you had completed by laying breadcrumbs out on the kitchen table? And that was going to be your way of checking to make sure you finished everything. Would that be a good system? And he immediately recognized that one of our 2 dogs would be on the kitchen table eating the crumbs off, and he'd have no record. That's a silly example, but it illustrates the point. Auditors are looking, is there a good system that would catch the most obvious things that could go wrong that would lead to having good, solid financial data? So a Yellow Book audit builds on the foundation of, we want to make sure the numbers are fairly stated, but it also says, is there anything about the way the numbers are being maintained throughout the year that could rise to significant problems? And so that's what a material weakness or a significant deficiency would be. Now, it's worth pointing out that the name Government Auditing Standards confuses people all the time. You would think, very intuitively, that government auditing standards apply to governments. Well, in fact, they don't apply to all governments, and they do apply to a number of organizations that aren't governments. Government auditing standards are issued by the GAO, the Government Accountability Office, and they apply to anyone who is receiving or administering federal grant programs, or is otherwise elected to follow the Yellow Book. So we're going to see nonprofits, colleges, universities, and local governments all circled into this Yellow Book Government Auditing Standards kind of umbrella. And certainly, if you've received federal awards, you're going to be subject to an audit in accordance with Government Auditing Standards. So far, we've built the foundation of, are the financial statements reliable? And did the auditor find anything in the system behind the numbers, in the way in which the books and records are maintained, that would need to be reported? And that brings us to our third component, which is compliance audit of federal awards. Anytime the feds provide grant funding, well, I can't say anytime they provide enough funding to get over the threshold that triggers this, they're going to have certain strings attached and want to know that those strings have been followed. The strings get attached no matter how big the dollars are, but the audit requirements only kick in at a certain level. And so the auditor has to go through and identify one or more major federal programs. And we'll talk about what that looks like in a few minutes, but essentially on a rotating basis, all of the big programs have to be tested at any entity receiving federal funds on a regular basis. And if the big programs don't provide enough coverage, some of the smaller programs will be mixed in as well. So the auditor every year will test one or maybe several major programs on a rotating basis, and it results in 2 different things. One is an actual opinion on major program compliance. The auditor will say, in our opinion, the auditee did or did not comply in all material respects with the types of requirements that could have a direct and material effect on each individual major federal program. I know, that was a lot of words. Essentially, the organization that received grants, did they follow the rules that go with that grant? Not necessarily every rule, because that would make the audit take forever, but the big rules. Did they follow the big rules closely enough to not have any major problems? That's an opinion on compliance, and hopefully we get an unmodified or clean opinion on compliance. We also get a report that's not technically an opinion on matters related to internal control. Now, if that sounds familiar, it's because one slide ago I said something very similar about the Yellow Book requiring that for a financial statement audit. But the Yellow Book report was saying, did the auditor see anything about the way the entity keeps its books and records? This, the compliance audit, the single audit piece, asks if the auditor saw anything about the way an organization carries out or administers its federal grants that makes it likely that they would not comply with one of the rules related to the program. And then also the auditor issues a report on the schedule of grants that are spent during the year. It's called a SEFA, Schedule of Expenditures of Federal Awards, SEFA. And that SEFA has to have an audit opinion in relation to the financial statements, saying, auditor, you audited the financial statements. That was 2 slides ago, a financial statement audit in accordance with GAAS. And this SEFA, this list of grants, it needs to be reasonably stated or fairly stated in relation to those financials. So the auditor's done 3 different things: audited the financial statements in accordance with the Yellow Book and tested both compliance and internal control over compliance for major federal programs. Tie it all together, and collectively, those 3 things make a single audit. Now, the rules for this come from one spot. We call it the Uniform Guidance, or 2 CFR 200. Its full name is much longer. It's the Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. You can see why we just call it the Uniform Guidance. It took a whole bunch of separate OMB guidance that used to be issued in separate circulars, pulled them all together in one spot, and it basically gives us one-stop shopping for everything governments, nonprofits, and higher education institutions need to know related to grants management. It's broken into 6 primary parts, and we're going to focus on the last 3 of those. The standards for financial management, that is, if you are a grant recipient, what are the standards you're held to during a single audit? Cost principles, that is, when you're spending federal money, what things are allowable, what are not, and how should you keep track of them? And then section F, audit requirements, what exactly goes into a single audit and what should your auditors be looking for and reporting on to federal agencies. There are also a bunch of appendices, and the only 2 that we're going to focus on today are the last 2, neither of which are technically in the Uniform Guidance. And in both of these cases, the appendix is a reference to a web page that is updated regularly. So we're going to talk about the current version of the data collection form, which is maintained by the Census Bureau, and the current edition of the Compliance Supplement, which is issued annually by the Office of Management and Budget. So let's hit just a few highlights of Subpart D of the Uniform Guidance. These are the standards for financial management, and this is basically the standard to which any recipient of federal awards is being held. So if you've received federal grants, you're getting a single audit, your auditor wants to know if you're following these rules. So what are these rules that we need to be looking at? The first is recipients of federal awards have to comply with all the requirements of that award. Seems fairly straightforward, and every grant has its own little nuanced set of rules. There are some general rules that apply to all grants, and there are some very specific and unique ones that are going to vary from program to program. But management, the recipient, is ultimately responsible for knowing what those rules are and following those rules. The second item is performance management systems. Now, this is something that frankly has not gotten nearly the amount of press that we might have expected it to when the Uniform Guidance first rolled out a few years ago. And it's something that continues to be on the OMB's tickler to get back to, but thus far we haven't seen any real movement. A performance management system is a way to track whether or not the recipient of a federal award has actually carried out the mission of that grant. Not did you spend the money on salaries and supplies, but did you actually accomplish what the grant was written for? All federal grants have some sort of underlying goal that they're trying to achieve, and a performance management system is designed to track whether or not you've achieved those objectives. It is technically a requirement of the Uniform Guidance to have a performance management system. It is, however, not currently part of the single audit for your auditors to look into it or report on it or anything else. So as you can imagine, since we tend to manage to what we measure, with no one looking at this on a regular basis, it's not gotten a lot of attention. So keep that in the back of your mind. You should have a performance management system. It's something that is required, but right now, no one's really holding you accountable for it. Flip over to the financial management system, and here we've got a lot of audit impact. And that may just be because it's a lot easier to get into the debits and credits, the dollars and cents of compliance when we're looking at financial management systems. So what are the rules that you, as a recipient of federal awards, need to follow related to a financial management system? Well, the first is you have to be able to keep track of each federal program separately. Now, we're going to see as we go a little later in the presentation what the feds really treat as a single federal program. But as a general rule, if you consider each grant application, each grant agreement, each individual program that you're running needs to be kept separately, it'll get you pretty close. Ultimately, your auditors may group a few separate programs together and test them as a unit, but tracking them individually makes perfect sense because you have to report on the results of each individual grant separately. And this is more than just keeping track of the revenue accounts. It means separate accountability for how you're spending the money. So for governments with a complex fund structure, it might mean using a separate fund or a separate sub-fund for each of your grants. For nonprofits, it might mean using some kind of class or account code in the middle of your account string, something that segregates out individual grants. Colleges and universities may do it through an account number sequence or a separate fund, or they may do it through some other kind of mechanism, project accounting in their chart of accounts that allows them to track. The bottom line is you ought to be able to run a report directly out of your accounting system that shows exactly what you spent on each of your federal grants, and not just the revenue on the expense side. There's no single right way to do it, but it needs to be in there one way or another. Your financial management system has to be well designed and be able to produce both complete and accurate financial results. That seems very self-explanatory. You just need to have a good system with good, solid internal controls. The specifics will change. We've got folks on the webinar today from all across the country. And so those of you who are in larger governments with very high populations, you're going to have one kind of internal control structure that is sized appropriate to the risk of having multi-office locations, a huge payroll, a large number of people where no single person knows everything that's going on, and so you need your system to be very robust. We've got folks on the webinar today who are with very small organizations where everybody sits in a single room, or at least did before COVID-19, and sharing information doesn't require any kind of formal email trail. It could just mean raising your voice and talking across the office. The idea is the system needs to be scaled, have good, solid internal controls, and be able to produce appropriate and accurate financial results for your grants. We need to have a system that keeps track of federal draws. So when you draw money down from the feds, or maybe you're drawing it through the state as a pass-through grant, you need to have a good record of how did you request the amount that was going to come. Now, some grants will advance amounts on a predetermined schedule, but for most of the cases, we're going to be saying this is how much I spent, this is how much I wish to draw or be reimbursed for. There needs to be good record keeping for that. And don't fall into the trap of saying, well, I know that I only draw based on what's in the general ledger, so the general ledger will always be there to back up any questions. Remember, auditors come in many months and maybe more than a year after some of the activities that we're auditing. And if you were to go back and try to rerun a report for how things looked a year ago, you might find it's no longer the same as it was at the time you made a grant draw. This is where it's very helpful to have some kind of a screenshot or a printout or something to show where you got your results from so that you're able to work from that. I'm getting feedback that we might be having some audio troubles, so I'm going to switch to a different device here to make sure that we have good, clean audio. Bear with me just a moment while I do that. It's good to have backups.
Even while you're switching over, just a good reminder for everyone, the slides are available on layman.com, as well as the recording following today's presentation. So just so everyone is aware, we'll make sure everything is available.
Well for you.
You know, it's a little faint. It seems to be getting a little bit better though. Can you?
Double checking here.
Perfect. That sounds great.
All right, try one more time. Samantha, can you let me know if I'm coming through okay now?
Yes, Stephen, you sound great.
Okay, good. Apologize for that. So we've switched over. Getting the wonderful message of low system resources affecting audio quality. The fun of dealing with home internets. All right, let's continue. So good system for supporting federal draws we've covered. Effective control and accountability is just sort of a generic comment that we need to have good positive internal controls. And this last item that I really do want to focus on are written procedures. There are some specific items in the uniform guidance that organizations that receive federal awards are told they need to have written procedures for in order for those costs to be allowable. And they're here on the next slide. Now, as a general rule, the first bullet says these are recommended for every compliance area. It's a good idea. It's a best practice to have written policies for everything that you do in your organization. But here are the 5 big items that absolutely need to be in writing if we're going to ensure we've got appropriate financial management systems. The first is a written policy for how you will draw funds down from the feds. We've talked about how that might be some kind of a screenshot or a printout of what the general ledger said at the time you made a grant draw. The second is procurement. Now, most organizations do have a purchasing policy, and it probably addresses when certain approvals are required, and does the board get involved, or do you have to have extra signatures over certain levels? And that's all great. You need to have that. You also need to specifically and explicitly have a conflict of interest policy. If you are administering federal awards, it is a requirement of the uniform guidance that you have a policy that says no one who has a financial interest in a vendor will be directly related or involved in the purchasing process that they would financially benefit from. It doesn't mean you can't do business with a business that's related to somebody on your staff. It just means they can't be part of the procurement action. It needs to be an independent body doing that. The third bullet, allowability of costs, is a policy on how you determine you're only charging allowable costs to the grant. Essentially, it's all of Subpart E, the entire federal cost principles. And we will touch very, very briefly in this webinar on it, but we could easily spend a couple hours focusing on federal cost principles and how you would develop policies and procedures for that. There needs to be something there. And if you don't have those, would strongly encourage you to start working on that or reach out to your auditor or an outside consultant to help you document those kinds of policies and procedures. The fourth item are compensation, personnel, and benefits. And this is going to be, if you're charging any payroll to a federal grant, then you need to make sure that you have written policies for how you handle payroll. Almost everybody does, but you need to then follow those internal policies. And the final one, travel costs. If you're going to be charging travel to a federal grant, first and foremost, those costs have to be in compliance with your own internal travel policy. What do you reimburse? How do you pay mileage? When are meals picked up? What do you do with per diems? Whatever your policy says, that's going to be the starting point. Well, that brings us to our first CPE prompt, and you should be getting a poll popping up on your screen. So entities that expend federal awards, they're required to have written procedures for which of the following? Is it drawing down grant resources, procuring goods and services, paying employees, all of these, or just items 2 and 3, or B and C on the list? Go ahead and lock your answer in, and we'll go from there. And as we walk down the list here, we said that you do have to have written policies for drawing down grant resources, procuring goods and services, and paying employees. So the correct answer is D. All right, let's move on. The uniform guidance talks about internal control. We said that you need to have them. So what does it say specifically? What's really the baseline need for this? Internal controls, we need to establish and maintain effective internal control over the federal award to provide reasonable assurance that the entity is managing the federal award in compliance with all the rules that it needs to follow. Essentially, what any good internal control does, it provides reasonable assurance, not absolute assurance, but reasonable assurance that we're following the rules. Now, we're told in the uniform guidance that these internal controls should be consistent with COSO, the Committee of Sponsoring Organizations. There's actually some really good data back in Part 6 of the Compliance Supplement that walks you through examples of that, and the Federal Green Book. So let's touch very briefly on what COSO and the Federal Green Book are. COSO, Committee of Sponsoring Organizations, is the gold standard for internal control. It's the 5 elements, the 5 components of control environment, risk assessment, control activities, information communication, and monitoring, spread over the 3 objectives, operating objectives of efficiency and effectiveness, reporting and compliance, and then broken down into 17 principles that apply to every level of an organization. The Federal Green Book, then, is really just the same thing, just applied in the context of government or government grants. So you can follow COSO or you can follow the Green Book. They're basically the same thing. If you had to pick, I would probably lean towards going to the Green Book because it already has been tailored a little bit to the government environment, but the differences are so minor, you're not going to see a big difference there. We don't really have time to go in any depth over these, but just at a high level, the control environment is designing a tone at the top that demonstrates a commitment to integrity and ethical values and oversight and proper authority and reporting responsibilities, and getting people the training they need in order to be competent in their jobs, and then holding them accountable for doing those jobs. It's very much a high level tone at the top kind of element. The second element, risk assessment, is that ongoing process of asking yourself, what sorts of things could go wrong? What kinds of non-compliance risks do we face? What's the danger that something may not play out the way it's supposed to? And once you've identified those risks, including fraud risks and the risk of change, then that puts you in a better position to figure out how to mitigate those risks for your organization. The third slice, then, the control activities, are the specific steps that an organization takes to mitigate those risks that they just saw. So these are going to be the very nitty-gritty, the policies and procedures that actually help us carry out our operations. It's going to be well-designed controls, including IT controls that are designed well on paper, but also implemented and put into operation where everybody can actually see them and use them. Speaking of everybody seeing things, information and communication is the element of control that says we're going to get good quality data and get it into the hands of the people who need it, both internally and externally. And then finally, there should be an element of monitoring where an organization periodically checks up on itself and says, how well are we doing in maintaining these controls? Now, it's important to point out that these 5 elements of internal control, the overall environment, the risk assessment, the specific activities, the information, and the monitoring, are supposed to happen at multiple levels. They should be happening for internal control over financial reporting. The Yellow Book looks at that. But they should also be happening for internal control over compliance. Are we following all the rules related to our federal grants? Of course, you'll never follow the rules related to grants if you don't know what they are. So we have to start with a good understanding of what all those requirements are and being able to then design controls that are responsive to those. Now, when it comes to documenting those controls, there's a little bit of a sliding scale in terms of how detailed or how generic the controls documentation should be. So when we're talking about something very broad, like the control environment, that applies to the entire entity taken as a whole. The control environment is overarching. By definition, it's going to be something that applies to everyone. So I would expect the control environment documentation to be very entity-wide. When we get to the other end of the extreme with control activities, it's very hard to envision a generic control that would work for every program because every program is so different. The requirements you're subject to are so different. And so control activities tend to be very program specific, focused on the unique needs of each program. And there's a bit of a sliding scale in between those as we work through information, risk assessment, and monitoring. So the idea would be that your documentation would be appropriately scaled. Some of it would be documented on a grant by grant basis, some of it more of an entity-wide basis, and those would work together in tandem and having good documented controls. So let's go to our second CPE prompt. I've got 4 statements here. 3 of them are true, 1 of them is false. So which of these 4 statements is false? Grantees should have written policies and procedures. Those policies and procedures should conform to COSO. Existing policies should be reviewed and updated as necessary. And all grants should adopt, or all grantees rather, should adopt the uniform policies that were provided by the OMB. Which one do you think is false? And to recap what we talked about here, clearly grantees do need to have written policies and procedures, and those policies and procedures we're told should conform to COSO. It's not a mandate, but honestly, I don't know how you could have a well-designed control that didn't follow COSO because it's such a comprehensive framework. If you have existing policies already on the books, of course they should be periodically reviewed and updated and maintain compliance with the rules from the OMB, which leads us to D. The correct answer is D because that's a false statement. There are no uniform policies provided by the OMB, and in fact, if there were, adopting them would probably not be the right answer because we need to tailor our policies and procedures for the unique risks, size, and complexity of each organization. So D is the answer that is false on this list. Moving on through Subpart D, other things that auditees are held responsible for. There are a variety of rules. We're not going to spend a lot of time on them. This could be a whole standalone training, but the process for how you draw down grant reimbursements or advances, how you keep track of cost sharing and matching requirements, what you do with program income if you're running a program that generates cash, how you revise your grant budget during the year, and when you need to play Mother May I, and when you should just have the authority to spend differently than the budget. There are specific rules on property standards when you use federal dollars to buy real property or equipment, and how you keep track of that and inventory it. There's a huge amount of detail if you have subrecipients. If you're receiving money either directly from the feds or passed through to you, and then you turn around and pass it through to someone else, there's a lot of detailed requirements for how you monitor those organizations, how you assess the risk, follow up with site visits and reviews of audits and everything else. But I do want to take a few moments and talk specifically about procurement standards, because this is an area that we talked about at last year's update. And frankly, I really thought it would be resolved by this year. Unfortunately, what we found is this is still an area with a lot of confusion and a lot of turmoil. So let's see if we can try to straighten this out. Here's what we found. The procurement standards say, hey, if you're a state government, you have your own policies and procedures. The feds aren't going to micromanage that. Well, that's great if you're a state government. But for the rest of us, we have to follow the general procurement standard. So the general procurement standard is first and foremost, begin with your own policies and procedures. Well, that's helpful. We get to write those ourselves. Make sure that your policies and procedures include a conflict of interest statement. And then always consider the most economical purchase option. Well, gosh, that sounds really easy. The most economical, that's not a big deal. Well, there's a lot of clarifying guidance that then goes along with that. So we're told that getting the most economical deal means every procurement transaction needs to be conducted in a manner that provides for full and open competition. Okay, great. That sounds good. Full and open competition. That's going to get us the best deal, right? But what does it exactly mean? Well, the feds in the uniform guidance laid out some thresholds, and they said, well, we recognize full and open competition. There needs to be some cost benefit here. So certain items are so small, we're going to call them micro purchases. They're so small that we're not even going to worry about, just as long as the cost is reasonable, it's not worth the effort in undergoing what we would normally think of as full and open competition. Just make sure it makes sense. Don't spend $700 for a mop. That's just kind of dumb. But make sure that what you're doing makes sense, is reasonable, and we're not going to worry about it. And when the uniform guidance was first published, that threshold was at $3,000. They tie-barred it to the federal acquisition rule, which was subsequently increased to $3,500. And we said, all right, anything under that, we're not going to worry about. Then we said, the Fed said, there are also bigger than micro, but still not really all that big. We're going to call these small purchases. Now, only the federal government could call anything under $150,000 a small purchase, but that was the threshold that they set. They said, all right, anything that's a small purchase under $150,000, all you need to do is get price quotes. We're not even going to be real formal about this. You can go online and look up a couple of prices. Technically, 2 or more counts. 3 is kind of a best practice, but we're going to be pretty easy about it. Now, I need to remind you, one slide back, we said you have to follow your own documented procurement procedures. My guess is that most of the organizations on our webinar today have a policy that requires getting competitive quotes well below the $150,000 threshold. So if your policy, for example, requires quotes at $50,000 or $20,000 or $10,000, you have to do that. But the feds don't require it until you get over $150,000. And at that point, we're going to get into sealed bids and formal advertising or competitive proposals where we're looking at different ways of evaluating bids that have been received, or in some limited situations, non-competitive sole source bidding could be permitted. But those are for the large contracts over 150 grand. Now there's a note in the upper corner of the screen that asks, wasn't this superseded by the National Defense Authorization Act of 2017-18? And it's a good question, because what happened is in that act, which should have been effective on June 20, 2018, those thresholds were increased from 3,500 to 10,000, from 150 to 250. And so it seemed like that was the new threshold. In fact, the OMB even issued a memo saying these are the new thresholds, and they became effective on June 20th of 2018. The problem was it was a little more complicated than that. The National Defense Authorization Act, which is a bill that gets approved every year, the reason they tie-barred this into that act is because it's an act that gets through and doesn't tend to get held up long in Congress. And so they snuck something in there. In 2017, they said, these are the new thresholds for higher education, so colleges and universities, and certain nonprofit research organizations. Well, that was great for them back in 2017. In 2018, it extended the benefit to everybody. Good, one uniform rule for everyone seems fair, I like it. The problem was it says upon codification in the Federal Acquisition Regulation. Okay, well that's fine. On June 20 of 2018, that's when the feds told, or the OMB told the federal agencies how to implement the changes. They were not actually technically effective immediately. Individual federal agencies were permitted to advance approve those if they so chose. Otherwise, the changes don't become effective until the federal acquisition regulations are updated. Well, those updates were actually proposed last either October or November of 2019, and they still haven't actually been put into effect. So we're still in this waiting game. So the bottom line of all of this is the OMB said there were some people who read in good faith that the levels were increased, and so they started using increased levels. Auditors, cut them some slack. If you have written policies and procedures that say you require bids at 10,000, you still have to have bids at 10,000. But if you had said, we're going to follow the federal rules, and we thought, honestly, that the federal rules had been changed, you're not alone. We said last year that this should all be resolved, and by next year, that will be the rule. Technically, it still isn't. So if you're a June 30, 2020 fiscal year end entity, and you've been using the new thresholds in good faith, auditors are told, even though technically those rules aren't in effect yet, we're going to pretend that they were and not write up any findings for it. I can't wait for this to get resolved. I don't know exactly what the holdup is, other than the federal acquisition regulation was supposed to go live this spring in the middle of COVID and the government shutdown. So everything just got slowed down. And all we can do is wait and see when this finally gets resolved, hopefully very, very soon. Let's talk briefly about Subpart E. That is that section of the uniform guidance that focuses on federal cost principles. And the OMB tells us that these federal cost principles are supposed to be so intuitive. They're supposed to be such normal, sound business practices that it shouldn't require any special work on your part to follow the rules. We can quibble over whether they're right on that. I would tend to argue that these rules are a little more prescriptive than you might necessarily come to on your own if you were just trying to operate under sound business practices or good accounting policies. But the bottom line of this is the feds have said, we have laid out rules on determining the cost of running federal programs. It's important to know how much a program costs, not necessarily because you're going to get reimbursed the full amount, but because you're never going to get paid more than your actual cost. So if you have a grant for $100 and you spend $60 on the program, all you're going to get to keep of that 100 is the 60 you spent. You can never keep more than your actual cost. So it's important to know what the cost is. Conversely, if you have a grant for $100 and you spend $120 on that grant, you're still only going to get the 100. So cost does not necessarily mean what you'll be paid for, but it does mean what the actual cost was, because it's an important cap to know how grants will work. So for a cost to be allowable under the federal cost principles, it needs to be reasonable and necessary for the performance of the federal award. That's a very subjective term. It's not defined super clearly in the uniform guidance. We get lots of examples about a prudent person and sound business practices and arm's length transactions, but basically it's going to be subject to your judgment and my judgment. Auditors try really hard not to be too hard-nosed on this, but necessary and reasonable can very well be in the eye of the beholder. There are some specific limitations that are laid out in Subpart E that have to be followed. We're not going to go through very many of those here just because that's not the focus today. And those policies and those costs to be allowable have to follow your own policies and procedures that you uniformly apply to both federally financed and non-federally financed activities. This became crucially important during COVID-19. Let me give you an example. We'll talk about this again later in a slide, but here's a really good COVID example. When the stay-at-home orders started rolling out across the country, a number of businesses made the decision to lay people off. I don't have any work for you to do. You're not going to get paid. Put them on unemployment, move on. a number of governments and nonprofits said, we would really rather not do that. We would really like to honor our commitment and keep these people on board. And so there's a huge number of public sector employees who were furloughed or told to stay at home and were unable to do their job during that time. Some of us had great telework setups and could keep being productive, but others, their jobs just didn't lend themselves to that. And in some cases, they continued to be paid even though they weren't working. It was intended to be short term, and it wasn't always clear where the money was going to come from, but that was what happened. Now, those organizations who made the decision that we're going to continue paying people, even though they're not doing their job because this is a public health crisis and it's important, they were given instructions, and we'll see this on a later slide, that they could continue to charge those people to federal grants, even though they weren't working on those federal grants. If this position was grant funded and it was your policy to keep paying people and charging their salary the same place you would have anyway, you could do that because you had a policy and procedure that you uniformly applied to both federal and non-federal activities. Another example, if you have a policy that says if you go on a business trip for a company or business government nonprofit approved training, then you should be able to be reimbursed a per diem, hotel stay, whatever it is for that travel. As long as that's your policy and you apply it consistently, you can do the same thing for grant-funded employees. However, the feds won't let you have a policy that says, we're going to be a little looser and open up the purse strings when it's Uncle Sam paying for it. If it's a benefit you offer to all your employees under similar circumstances, then it can be charged as part of the cost of a federal program. So we need to see those costs being consistently treated as either direct or indirect. So no making switches back and forth. Following GAAP as a general rule, there are exceptions for certain grant items can be allowable costs all at once. For example, the purchase of equipment that is covered by a grant, even though GAAP might say to capitalize and depreciate that. Very important, not included as a cost that's used or to meet cost sharing or matching requirements of any other program. There's a concept of no double dipping, another concept that we'll touch base on later with the federal memos, but there are a lot of federal programs that came out to try and help people through the COVID-19 pandemic. And the CARES Act alone sent money to many hundreds of different federal agencies and sub-agencies, and so the money was all over the place, and the goal was no double dipping. You can't, a cost is a cost of this program or that program, it can't be both. So you can never use a cost as both the cost of this program and call it anything else at the same time. And our last item here, very subjective, but critically important for a cost to be allowable under federal cost principles, it has to be adequately documented. Now, adequate, again, is in the eye of the beholder. As a general rule, it never hurts to over-document. It can hurt very much to under-document. So I'd encourage you to keep that in mind when you're deciding how much documentation is necessary to be adequate, but follow your own policies and procedures there. One area that bears some special note is compensation, payroll costs. It's very principles-based. Those of you who've been around the public sector and grants for a number of years will remember that before the uniform guidance, we were not just a little prescriptive, we were ridiculously prescriptive when it came to what made salary costs allowable. Of course, the feds were just trying to protect themselves. They said, we only want to pay for our fair share, but in so doing, costs got questioned and disallowed all the time over minutia of really small record keeping. So what's changed now is very principles-based, and they said payroll costs are allowable as long as they are reasonable for the services that were rendered, they follow your own internal policies and procedures, and they meet the minimum standards laid out for standards for documentation. I've got those here on the next slide. What's a standard for documentation? Well, it needs to have records that accurately keep track of what someone worked on. Okay, so you need a good system of internal control. Internal control is always about trying to mitigate risk. There's a risk that somebody will have their time charged to the wrong program. How do we mitigate that? We design internal control. And what you do for internal control and what you do for internal control and what you do for internal control may all be slightly different. And that's okay. Different organizations, different complexity, there may be different ways to get there as long as it's a well-designed system. Whatever method you use has to be well integrated and incorporated into the official records. So You know, the whole idea of, well, I do payroll this way and then I just kind of keep a little spreadsheet off to the side for grants. Yeah, that's probably not going to cut it. We need the allocations method to be very much incorporated into your official accounting records. We need to keep track of the whole. Some organizations will try instead to say, I'm going to only keep track of the time I spent working on federal grants and not worry about the rest. Well, allocating someone's cost means knowing how big the whole was, so I know how big the federal portion is as a percentage of the whole. I've seen places say, well, my executive director spends 10 hours a week on this program, so I charged 25% of their salary. Okay, well, I see what you did there. You made an assumption that your executive director works 40 hours a week, and so 10 hours a week is 25% of that. But what if your executive director works 50 hours a week? Now 10 hours a week is 20% of that. What if they work more than that? You see, in order for this to make sense, we need to know what the whole is. And so it's important to capture that. And that means capturing both the federal and the non-federal activity. Whatever your own internal policies are, you need to follow those. And we need to have some kind of support for how we're divvying up the costs. Now, that sounds like a lot of rules, but that's actually fairly broad rules that gives you a lot of latitude within them. We're told that budget estimates that are set up front, well, I expect someone will work here, not really enough. But if the system that designs budget estimates, that you use for budgeting gives you reasonable estimates of what will actually happen, and any changes from when the budget's adopted are identified and corrected, then that's okay. In fact, we're even told certain things like short-term filling in for someone on sick leave or even maternity leave isn't enough to require changing how things are charged. But you do need to have some kind of internal control that's an after-the-fact review, something that says, hey, does it still make sense? So one option could be to budget well, charge people where the budget is, and then periodically ask department heads to sign a statement saying, hey, here's a report of who we charged where. Does this look right? And they can say, yep, that's what they did. Or, oh my, I forgot we were still charging John to that ABC grant. That closed, or he's not doing that anymore. We need to make a correction. As long as there's some kind of after the fact, it does not have to mean weekly timesheets. Once upon a time, it did. We've moved past that, and a well-designed system of internal control gives you a lot more flexibility. All right, let's take our third CPE prompt just to make sure we're all still in this together. When charging personnel costs to a federal grant, a grantee should do which of the following? A, follow its own documented personnel policies. B, allocate costs between programs on a reasonable basis. C, conform to the standards of documentation that are found in the uniform guidance. Or D, we should do all of those. Go ahead and lock in your answer. And as we look through this very principles-based, we absolutely need to follow our own policies and procedures. We need to allocate costs in a method that is reasonable, and there are certain limitations in the uniform guidance we have to follow. So the correct answer is D, all of the above. And that brings us now to subpart F, the actual single audit itself. This starts with a financial audit conducted in accordance with both GAAS and GAAS, and it adds those compliance requirements we talked about earlier. A single audit is broken into 4 major sections, 4 primary stages, and we're going to move pretty quickly through these. What goes into a single audit? Well, the first is to figure out if you even need one. Do we need a single audit? We start by management, the auditee, preparing a schedule of expenditures of federal awards. This is a list of all the grants money that you spent during the year. Now, one item of note, we have been told, it's still in draft form, I haven't seen it in final print yet, but we've been told that when the compliance supplement does come out, it's going to tell us that COVID-19 related funding has to be separately broken out on the CFA. We had that a few years ago back in, well, I guess 10 years ago now, with ERA funding, the Accountability Recovery Act. Back then we had to break ERA money out and show it on separate line items. We're going to have to do the same thing with COVID. That's going to be interesting because COVID-19 money could be buried inside a CFDA number or broken out separately. But one way or another, we need a list of all the money spent, and we'll need to separately identify by putting COVID-19 at the beginning, the amounts that were related to that. Now, if that list of all the grants, so everything that you spent during the year, not necessarily the grants that were awarded to you, not necessarily the cash you received, but the actual expenditures of federal awards, if that was over $750,000, then you're going to need to have a single audit, and the auditor will need to test that CFA to make sure it's fairly stated in all material respects. The threshold moved to 750,000 a number of years ago, and when it did, there were about 5,000, almost 6,000 entities nationwide that used to have single audits that dropped off the list. Can't say for certain yet, but there's a pretty good feeling that the CARES Act is going to put a lot of those 5,000 to 6,000 entities back on the map for a single audit this year. So if you're one of them thinking that you might be subject to single audit this year and trying to get a refresher, now's a great time to be here. And if not, we'll have this thing recorded for those who weren't able to be with us today. The auditor then is going to determine which programs to test. We call those major programs, and it's a process that the auditor handles on their own. They're going to look at programs by the Catalog of Federal Domestic Assistance, CFDA, Catalog of Federal Domestic Assistance, individual numbers or occasionally groups of numbers, they call them clusters. The auditor will go through and divide those into big and small camps, type A and type B programs that are over or under the $750,000 threshold. And they'll do a process of risk assessment, which basically says, are any of the large programs, the type A programs, were any of them tested in the last couple of years? And if so, did the auditor find any problems with those? Programs that have been tested and had no problems will be considered low risk. All the rest will be left in the not low risk category. From there, if there were any low risk programs, the auditor will look at the smaller programs. If all the programs were high risk, the auditor just picks those and it's done. But if there were some low risk programs, the auditor goes through the smaller programs to see if any of them should be picked as major. And there's a process where that threshold gets looked at and they pick a certain number to replace the low risk ones. And it's a whole thing that the auditor will walk through with different levels, but essentially they're trying to come up with which programs will give us good coverage on the CFA. In the end, the auditor is going to need a minimum of 20%, possibly 40% of the dollars on the CFA to be tested. And that's based on the auditee's track record of clean single audits. Once the auditor has all the major programs selected, and it could be 1 or it could be 10, just depends on the size and complexity of the single audit, the auditor will go through and start doing testing. Now, for the testing, the auditor has to look at which compliance areas are applicable according to the OMB compliance supplement. We're going to talk about the OMB compliance supplement in just a few minutes, and it's got a list of a couple hundred programs that are in there. If the specific program that was selected as major is included in the compliance supplement, we can look to see whether the Fed's identified a requirement as being applicable. Next, we have to ask ourselves, even if this is applicable at the federal level, does it necessarily apply locally? There are situations where a grant, as it's written from the state to the local unit that's actually carrying it out, the state kept a particular compliance requirement and didn't pass that on. So there's no expectation that the nonprofit running the program actually has to follow that rule. So is it applicable at the auditee level? And then finally, does it have a direct and material effect? Sort of the, do we even care? If, for example, the auditee completely failed to follow that compliance requirement, is that compliance requirement important enough to impact the auditor's overall opinion? If so, the auditor will test it. If not, the auditor won't test it. Here are the list of the 12 compliance areas. We're going to talk about these more later, so I'm not going to read them to you now, but there are 12 different areas that get looked at for each individual major program to determine which ones should be tested. And then ultimately, the auditor is going to issue some reports. There's an in relation to report opinion on the CFA that says it's fairly presented in relation to the financial statements. There's a yellow book report that talks about matters that came to the auditor's attention related to internal controls over financial reporting and compliance with laws and regulations. There's a single audit report that focuses on compliance with each individual major federal program. So if you have 3 major programs and let's say there were 6 compliance areas each, the auditor is essentially opining on up to 18 different items there, 6 times 3 different things that we would be looking at. And if they are all clean, you get 1 opinion. If there are problems with 1 or more of those, the auditor would explain those in the report. And then also the auditor, anything that came to their attention related to internal controls over compliance would also be reported. The auditor bundles all that up into a single place called a schedule of findings and question costs, and it gives a high-level summary of the audit. What were the results? Were there any findings? And shares the details of those findings if there are any. If there were findings in the prior year, there's a summary schedule of prior audit findings that the auditee should draft, essentially saying, what have we done since last year to clean up last year's findings? If there were none, just say so and move on. And at the end of that process, all of this information gets bundled up electronically into a data collection form. It's an online reporting that uploads a copy of the audited financial statements and then all the details of findings and things, and puts them together in a publicly searchable database that's available on the Census Bureau's website. So now the big news. What is happening with the compliance supplement this year? I wish I had more definitive answer, but all we can do is what we've got. So the compliance supplement is supposed to be issued every year, and it's designed to assist auditors in conducting single audits and identifying what auditee responsibilities are. I've often said that the single audit is the ultimate open book test. As an open book test, what I mean there is that auditors and auditees alike can go look up what the rules are that they're being held to. Now, each year, the compliance supplement becomes effective for fiscal years ending on or after June 30 of that year. And the compliance supplement used to be issued in March each year, and over time it got closer and closer, and it was being called the June compliance supplement. And several times it has been issued in July or August, I think even as late as September once. I get it. There's a lot of work. This is a big document. It's over 1,600 pages long. There's a lot that goes into it. But a couple of years ago, the feds took a year off from updating the compliance supplement. They said, we're only going to put out a thin addendum. It's kind of a skinny update to last year's compliance supplement. And we're going to use the time we saved to get a head start on next year's compliance supplement. And we're going to shift it from being issued in June. We're going to get back to issuing it in February or March. The idea was the rules that become effective for June 30 audits would be available for auditors and auditees alike to look at before the fiscal year was over, while there was still time to take some corrective action, and audits could be planned a little further in advance. Well, I'm afraid that didn't happen. The compliance supplement for 2020 was in clearance, we're told, in March. And of course, the pandemic hit, and that pushed everything back. Today is June 21st, and as of today, I'm sorry, July 21st. I wish it was June. Today is July 21st, and we still have not seen the June compliance supplement be released yet. They are hoping that it will be out yet this week, and so stay tuned. There'll be all sorts of email communication when it comes out. I know it's mostly written to auditors, but auditees, I really do encourage you to have this and look up the programs that you have. There's some really good information in there and some important information in there. All that said, this edition, which is expected, again, to be over 1,600 pages long, is still not all-inclusive. And there are some provisions in there where we're reminded the laws change all the time. In fact, this year especially, the laws change all the time. Those of you who are nonprofits and had your eyes on the payroll, the Paycheck Protection Program this year, how many times has that changed during this season in 2020? The deadline has been extended, a new round of funding was provided, the rules have been relaxed. It went from a 10-week period to a 24-week period. The rehire period pushed back many months, and they continue to talk about potential future changes. That's just one example of many, many different funding sources that were buried inside the CARES Act, and things keep changing. And so auditors are warned that following what's written in writing in the compliance supplement is not a safe harbor. There's a need to watch for subsequent changes. And despite the delays, what's going to be issued, hopefully this week, is still only the information that was in pre-clearance from back in March before COVID hit, which means there's going to be virtually no COVID-related guidance in this compliance supplement. I did actually review a draft today as part of my role on the AICPA's Government Audit Quality Center Executive Committee, a pre-draft of Appendix 8 that was focusing on COVID-19 related information. And there's just a teeny little bit of guidance warning people that more is coming, and basically saying, we're going to put out an addendum sometime, maybe September, we're hoping. Here's a challenge. Even that addendum is still expected to be applicable for June 30 year ends. So it's going to make it really, really tough for auditors to feel like they've got all the guidance out there. There's not going to be any kind of excuse of we issued our audit before the rules were out. If the rules come out and you didn't follow them, it's going to be a problem. We may see some delays in people being willing to issue single audits until all the guidance and regulations are known. The compliance supplement's got a lot of information in it. It's all laid out here by part. And here's what you need to know about each of these parts. Part 1 has some great overview information. Part 2 has a nice graphical representation of which areas are applicable. Part 3 gives you the nitty-gritty for each of the 12 compliance areas and explains generically how they work. Part 4 and 5 give you the specific requirements for individual programs that are found in the compliance supplement. So if one of your major programs is in the compliance supplement, you need to start with Part 3 for the guidance that applies generically to all programs, and then look in Parts 4 and 5 for the parts that are unique to your program. And even there are cross-cutting sections from certain individual federal agencies. So if you're a K-12 school, for example, there's a cross-cutting section from the Department of Education where they don't bother repeating these rules in each individual school grant. They say them once and say, this applies to everything that follows. HUD has done the same. There's several others that have. Part 6 gives you some great understanding of how to apply the COSO framework, the Green Book that we talked about earlier in the presentation, in the context of federal awards and internal control over compliance. And then this is going to be very important for auditors. Part 7 talks about what do you do if a program's not in the supplement? Because I can tell you there are a lot of programs that are going to be new this year because of COVID-19 funding. And I say this year, maybe not for June 30 year ends, but certainly for September year ends and December year ends. Over the next year, we're going to see a lot, many billions of dollars of CARES Act money being audited. And a lot of that are going to be programs that there just isn't a compliance supplement for. Part 7 tells an auditor what to do in the absence of specific guidance. So a few key things that you need to know from the various parts. Part 1 reminds us that this new compliance supplement, and again, it's not actually issued yet, but when it comes out, this is what it will say. It's effective for fiscal years that ended on June 30, 2020 or later. It'll be good for a year. The safe harbor status says we only update this once a year. This year we're going to get an addendum, so I guess twice a year, but laws change all the time. Delays are normal, so auditors need to make a reasonable effort to stay up on it. So if you're an auditee, there's not a huge burden on you here other than just to be aware of what the rules change as grants come to you. But if you're an auditor, I strongly encourage you to sign up for, be a member of the GAAQC, the Government Audit Quality Control Quality Center from the AICPA, that they'll keep the auditing profession updated as these changes come out as best they can. And remember, auditors, that while the compliance supplement includes suggested audit procedures, you do still have to use your professional judgment and determine what other steps might be necessary to get good audit coverage. Part 2 is a matrix of compliance requirements, and it lists all the programs in the supplement and which compliance areas are subject to audit. So 2 years ago, we would have a list of which ones were applicable. Last year it switched, and it was which areas do we want the auditors to focus on this year. So just because something is not marked with a yes, if it's marked with a no, that doesn't mean that the auditee doesn't still have to follow those rules. It just means auditors were told they don't have to test them. So in theory, each program has no more than 6 of those 12 areas selected for testing. Now I say that for purposes of counting, we have been told that A and B count as 1. So you can technically have up to 7 areas that would be yes. So in this first example, program 10,000.000 there, we've got A and B count as 1, cash management is 2, equipment management is 3, program income is 4, reporting is 5, and special tests and revisions is 6. This is a lift out of last year's matrix. I put an alert here warning that some programs may switch which compliance areas are applicable from year to year. So auditors, you need to be mindful that what you did last year may not be what you need to test this year, because it may be that of the 12 compliance requirements, 10 of them are applicable, and each year the federal agencies can choose which 6, or technically 7, they want you to test. So be watching that. We've been told that they expect those changes to be minimal from year to year. They really think that they honed in on the 6 most important last year, but that could change from time to time. And the other thing to be aware of is even if which areas apply haven't changed year over year, there is an alert from the OMB warning that with COVID funding, there may be additional nuances in areas that were applicable last year and are still applicable this year, but there may be extra guidance. So make sure you're using the new compliance supplement. I know at this point, many of you have already started planning some of your single audits. You may have even done some preliminary testing, and all you could do at that time was work off last year's guidance. I get it, but when the new guidance comes out, read it carefully because there could be new things that get snuck in and you don't want to miss that. All right, our fourth CPE prompt. Auditors are expected to do which of the following? A, perform only those tests specifically included in the compliance supplement. B, apply professional judgment in determining which tests to perform. C, request instructions from the grantor agencies for any program that's not listed. Or D, only select programs that are included in the compliance supplement. That way there won't be any problems. So which of those four do you think is the correct answer? Go ahead and lock in your answers. And what we see here is the correct answer is B. Auditors need to apply professional judgment. We do get a lot of guidance given to us from the compliance supplement, but there are times when an auditor will need to test items not listed because professional judgment always has to trump there. And we're not told to ask for instructions every time there's something not listed in the program because we have a whole part 7 to walk us through that. And unfortunately, we can't limit ourselves to only those programs in the supplement. So we're left with a lot of professional judgment application, which is probably a good thing. All right, part 3. The big change this year for part 3 is back when the uniform guidance first kicked in, there was a lot of gradual rollout of its provisions. So certain grants were awarded prior to the uniform guidance being issued. They were allowed to continue to follow the rules that were in effect from before the uniform guidance. Other programs were awarded after the uniform guidance, and some grantees, even though they were given the option to make an election to move everything over and follow the new rules, some auditees elected to have a foot in both worlds, so to speak. Well, it appears that 2020 will finally be the year that we let the old pre-uniform guidance section go. So part 3.1 will be removed, part 3.2 will be renamed just part 3, and everything that we're going to talk about now is focused on the uniform guidance. So the old option of trying to decide which system of use you would be working under, we expect will be removed this year, and it will be even old awards would now be subject to the new guidance going forward. So let's walk through the 12 compliance areas. A is activities allowed or unallowed. Well, these typically are unique to each program. It's hard to give generic advice on what sorts of things are allowable. So parts 4 and 5 that are unique to individual programs are likely to tell you this. But essentially, this is what are the areas that this grant is intended to be used for. If this is a grant for feeding the homeless, then we would not expect there to be a lot of road construction money being spent out of it. If this is a grant that's designed to educate students, then we wouldn't expect to see a lot of police cars being purchased with it. These other costs may be very eligible or allowable in other contexts, but the activities allowed are what is this grant all about? And that will be unique to the individual grant agreement. You need to have good policies and procedures, good internal controls to make sure that you're spending money only on the activities that that grant's for. One of the best ways to do that is to just put a person in charge of a program that is going to be watching and monitoring and making sure that the costs are spent appropriately. Item B, which really, as I said, frequently gets tied in with item A, is going to be federal cost principles. So federal cost principles used to be espoused in the OMB circulars A87, A21, and A122. They're all now rolled into the uniform guidance. So the federal cost principles follow the basic guidelines that we mentioned before: reasonable, necessary, allocable, and adequately documented. If we get those in there, we should be in good shape. And there's a whole section, subpart E, that gives you all the specifics of what belongs in federal cost principles. So good policies and procedures to make sure the way you're spending money is adequately documented and is only for things that are reasonable and necessary. Under the heading of cash management, we have two primary ways that grants get paid. One is advance. This is the preferred method according to the uniform guidance, where you give an organization money and they can use it to run a federal program. We recognize that running federal grants is expensive, and not every organization has the cash flow to front their own money first and then go forward. Although in practice, we do still see a lot of organizations choose to use the reimbursement method, where we'll say, all right, instead, you spend the money and then request reimbursement, and that's how we'll know you're only getting the amount that you truly need in order to spend. So one way or another, there need to be good written policies and procedures on how you're drawing down either cash advances and spending them quickly or reimbursement for costs actually incurred. Subpart D is currently taken off the table. It's reserved. It used to be used for the Davis-Bacon Act. You can now find that wage rate determination section in the cross-cutting rules in 20.001. Eligibility tends to be unique by federal program, but basically what makes individuals or groups or service areas or even subrecipients eligible to receive funding, and what appropriate steps are being taken to identify, monitor, and follow up on subrecipients. For equipment and real property management, the general rule is if you use federal money to buy something, and they don't even start to think about it as a tangible item unless it's over $5,000. So laptops and iPads and other, I will say small ticket from the federal perspective, electronics are considered consumable supplies. You may treat them differently internally, but the feds don't consider it equipment until it's over $5,000. When that happens, you should treat it like it's yours. Insure it, care for it, inventory it, and if you do need to dispose of it, then either reinvest the proceeds into the program or return them to the federal government if there's some useful value left at the end of that time period. Matching level of effort and earmarking, again, tends to be unique. Some grants will have a matching requirement where you have to put up a percentage of the overall budget, or a level of effort requirement where you need to keep spending what you were spending before you got the grant and not supplant your own spending with federal dollars, or maybe an earmarking requirement where a certain percentage of the funding has to be used in a certain way. Those rules will vary by grant, and in general, you're going to look to either the grant agreement or parts 4 and 5 for that detail. Every grant has a starting period, and most grants have an ending period, and that period from when the grant starts to when it ends is called the period of performance. The period of performance is the window during which you're allowed to spend federal awards. In general, if you have incurred costs, you have no more than 90 days after the funding period has expired to pay those. We occasionally run into problems where a grant is used for some sort of construction activity and there are still punch list items and the final checks haven't been paid yet. And in order for cost to be allowable, it has to fall inside the period of performance, and that means spending and liquidating within the appropriate time period. If you have a reason that you need to continue spending later, you're going to want to file for a no-cost extension. A no-cost extension says, I want the grant period of performance to be spread out longer, but I don't need any more money. And in fact, the OMB has issued guidance in relation to COVID, encouraging federal agencies to offer no-cost extensions with very little hassle. So if you were running a federal program and you lost 3 months with people not being in the office, or even more with other issues and being, redeploying your efforts to dealing with pandemic matters, you should be able to go to the feds and say, look, I know we were supposed to wrap this grant up by June 30, but we really need more time. They're supposed to grant those up to a year with really very, very little effort at this point. Procurement, suspension, and debarment, we talked about before with the procurement thresholds moving up from 3,500 to 10 grand and 150,000 to 250,000. It's supposed to happen any day now. It kind of sort of happened back in 2018 if you thought it did, but it really didn't. So it's confusing, but regardless, you need to have good systems for all of that and make sure that you're spending dollars in a way that's full and open competition and is the most economical purchase option. On the suspension and debarment side of things, there is a list of suspended or debarred parties maintained by the federal government. You can find it at sam.gov. That's the System for Award Management, sam.gov. Also a little play on the Uncle Sam that they like to do in their logo, but it's the System for Award Management. And if there's a vendor that you expect to purchase goods or services for more than $25,000 from, or any subaward, regardless of dollar amount, you're supposed to go to this website and look up the excluded parties list service and say, are they on the list of people you're not allowed to do business with federal resources? It's not a huge list. I have maybe found one real life example in 25 years where one of my clients actually was trying to do business with someone and they turned out to be on the list. It's not a huge time investment to go check. You go to a website, you type in their name, it comes back with no hits and you move on. But you do need to document that happened, something to prove that the effort took place. Program income is the requirement of what to do with money that is generated while you're running grants, whether that's fees that are charged or interest that's earned on advances or refunds or sales or things that you operate. In general, you're going to deduct it from the actual cost, and that gets you the net cost of running a federal program. Item K is currently removed from the list. L is going to be reporting. Almost every grant has a requirement to make periodic reports, maybe monthly, maybe quarterly, and tell the feds what it is you spent the money on. And you need to have good systems and internal controls for preparing those, making sure they agree to your books and records. I strongly encourage you to only complete financial reports from what's on the general ledger. Don't fall into the trap of saying, well, we've got these spreadsheets on the side that keep track of things. In the end, the auditors are going to audit what's integrated into your accounting system, not what separate little notes that a program director kept. So strongly encourage that to be based on official accounting records. And then part 3 walks us through subrecipient monitoring and talks about if you are a pass-through entity, you need to identify the award and the applicable requirements to your subrecipients, evaluate the risk that they pose to you. So a subrecipient, there's a risk they will misuse the money. You as a pass-through entity are on the hook for how they do things and have to monitor them. So evaluating the risk that they will misuse it is part of your role, and then monitoring the actual uses of those funds. What kind of monitoring you do should be scaled to the risk assessment. So if they are a very robust entity with strong controls, a long track record, and they're getting annual audits, you may be comfortable with just reviewing their annual audits and having a once-a-year phone call. If they've had problems in the past, or they're smaller, or had system changes, or just don't have the sophistication, you may need to do site visits, and that might need to be once a year, or every quarter, or every month. For some entities, the risk may be such that you need to see copies of invoices before they claim reimbursements. For others, you may be very comfortable saying, just give me a report that shows it's out of your system and we'll take it. All of those are appropriate answers depending on your level of assessed risk. And then individual programs almost always have some kind of special test and provision, something that didn't fit in one of the earlier buckets. It's kind of the proverbial other on a list. And so this other item is just anything else that would be filled in. If the program is in the compliance supplement, you'll find what special tests and provisions exist in parts 4 and 5. If not, you go to the grant agreement and read to see what other things are required there. Let's move on to CPE prompt 5. Which of these statements is true? Auditors test all requirements that are identified as being subject to audit. Auditors test requirements that could have a direct and material effect. Grant recipients might still be subject to compliance requirements even if the auditor doesn't elect to test them. All of those are true. Go ahead and lock in your answer. So let's walk down our list. Do auditors test all requirements that are identified as being subject to audit? Well, you would think so, but sometimes even though they're subject to audit, they may not be applicable at the local level. So we don't necessarily. Do we test all requirements that could have a direct and material effect? We used to, but we don't anymore because it has to be marked as subject to audit by the feds and have a direct and material effect. So it's not that one. C, grant recipients might be subject to compliance requirements even if the auditor doesn't test them. That's your true statement. That just because an auditor is not testing it doesn't mean the rules don't apply, and it doesn't mean that the feds won't come in and monitor something later. So auditees, please be cautious to not go lax on controls just because an auditor may not be looking at it this particular year. Part 4 gets into the agency program requirements, and it lists out about 200 specific programs. We're expecting another handful, 30, 60, 90, I don't know, programs to come in the COVID-19 supplement later this fall. They're still working through that. But 200 programs is great. It's just, if you go out to beta.sam.gov, which is where the current listing of the catalog of federal domestic assistance is, there are well over 2,000 programs out there, and 90 new programs were just added for COVID. So 200 sounds great until you realize it's well less than 10% of the programs that are out there. It's helpful. Many of the largest programs are picked up, but it's not at all uncommon for auditors to be testing programs that just simply aren't in the supplement, and they have to use Part 7 then to make up their mind. One downside is if you are testing a program not in the supplement, that means that nobody picked the 6 items, the 6 compliance areas. So now that rule drops off, and auditors have to test every area that has a directed material compliance effect on compliance, which may be more than 7 items. Sorry, it's just how it works. Don't forget that Part 4, while it does have a section for each program, sometimes there are cross-cutting sections that apply to a group of programs. That's usually noted in the individual sections, but just be mindful of that as well. Part 5 picks up a handful of clusters. There are 35, 36 total clusters that are in the compliance supplement. Research and development's a huge one. Student financial assistance for colleges and universities is a huge one. And there's another 34 or so separate ones that are in there. These are programs that where multiple CFDA numbers can be grouped together and treated as one for testing purposes, even though they are technically separate programs. We have been tentatively told to expect that there will be no new clusters created based on COVID-19, that they won't do like they did back with ERA. There were a lot of new ERA-specific clusters created. We've been told they're not going to repeat that, but you won't know for sure until the addendum comes out this fall. Part 6 walks through those 5 components and 17 principles of the COSO and Green Book that we talked about earlier. It's a great example, especially for auditees. If you're looking for what would be a good control that I could put in place, that would be an excellent place to go and look to see what would fit well there. And then Part 7, we've mentioned it several times. This is the guidance on what to do if you're not sure which compliance requirement is going to be applicable, and how do I determine what audit procedures should be followed. So let's talk about the forthcoming COVID-19 addendum. It's intended to address COVID-19 funding, and that was not available to include during the initial compliance supplement release. It's hard to understand exactly what this extra couple of weeks or a month or two is going to provide for that when it was so late getting the main supplement, but they're telling us that they're going to get this thing out by September, because the AICPA and others have been rightfully screaming, we really can't do these audits if we don't have the guidance. Well, it's interesting. One of the feedback questions we got from one of the federal agencies was, well, why not? You've got Part 7 that you audit programs that aren't in the supplement all the time. Well, you're going to see in a minute how very confusing some of the COVID-19 related guidance has been right now, trying to figure out what even applies. And so the idea is, especially for the big programs, and there are 5 or 6 really big programs from the CARES Act that will make up the vast majority of the money, in addition to scores and scores of existing programs that got COVID money that are going to be impacted by this. And if we could just have compliance supplements for those few big ones, that would cover an awful lot of our concerns, especially since smaller programs are unlikely to be major anyway. So when you look at the CARES Act, I forget the exact number of federal agencies that are tracked. It's 30, 40, 50 of them. There were like 3 that didn't get CARES Act money. Virtually every federal agency got billions of dollars through the CARES Act. A lot of that money was funneled in to support existing programs. So there's already a program designed to feed kids. Great. Let's not set up a new COVID-19 feeding program. Let's just put COVID-19 money into an existing feeding program and let them use it. In those cases, the compliance supplement may already address what is needing to happen. If not, then the addendum may address what needs to happen. If not, there may be some other guidance coming out from the federal agency that addresses what needs to happen. But at least it's not a new program. And because they're not creating new clusters, auditors will not have to treat these as new programs. That was a major problem with ERA 10 years ago. By adding ERA money into a cluster, the program technically became new. Even if a particular auditee didn't get that money, it was considered a new program, and it threw off risk assessment, and all sorts of programs were being tested again when they really shouldn't have needed to be. We've been told that won't happen this year. And so if just because COVID money has been added, yes, it does still have to be separated on the CFA. Yes, it has to be separately reported on the data collection form, but it won't trigger new program risk assessment. So that's good. There are, I think the last count I heard was about 90 new CFDA numbers being created related to COVID. Some of them, things like the Provider Relief Fund, brand new program, very easy to track, and they're still working through that process. When a new program is created, there's a lot of things that have to be updated. The Catalog of Federal Domestic Assistance, which is now at beta.sam.gov, is one of those. And that information has been really challenging to stay current. In fact, we've been watching some programs being updated regularly, which is good. We want them to be fixed if something's wrong, but it's hard for an auditor to know when the moving target is done moving, and they can actually start locking in on what their procedures are going to be. Despite the fact that this addendum isn't coming out until at least September, we're told it is still applicable to June 30, 2020 fiscal year ends, which means it will be challenging for auditors to complete their testing on single audits with June 30 fiscal year ends before the supplement comes out. We can act in good faith, we can hope we got everything, but if there's guidance in there and it's applicable, we're going to have to make sure that that gets built in. So I know everyone's going to be working through a lot this summer. Many of us are still in a position of needing to work remotely based on where our individual states are and their reopening plans. And it's going to make audits a little different than we've done them in the past, regardless, but especially this need to better understand what the rules are is going to be a challenge. And depending on when you receive the money, I mean, there's CARES Act money that went to the states early, but it may not have made its way down to local units, to governments, nonprofits, and higher ed until after July 1st. If that's the case, there may not be much implication of COVID-19 on actual testing from June 30 year ends. We'll just have to wait and see. So here's some of the tentative guidance from beta.sam.gov, and this is very interesting. So the first item on the list here is the SBA Economic Injury Disaster Loans. The Economic Injury Disaster Loans are federally secured loans. So the SBA is the lender, and they're providing a low interest rate, and they're not requiring the same kind of collateral. And so nonprofits and other organizations may have applied for these economic injury disaster loans. According to beta.sam.gov, the EIDL programs, even though they are federal loans, they don't have an ongoing compliance requirement. See, some federal loans, you have to maintain annual compliance requirements. A lot of HUD loans are like that. Some USDA loans are like that. And so it's not uncommon for a CFA to include not just the amount borrowed, but the amount still outstanding, because there are ongoing compliance requirements. The tentative guidance, and we won't know this for sure until the compliance supplement comes out and nothing has changed, but the tentative guidance is those EIDLs do not have continuing compliance requirements and therefore will not be reported on the CFA. They are not subject to 2 CFR 200. Okay, good news. Next, we have the Paycheck Protection Program. The PPP, not available to governments, but it was available to nonprofits, and especially nonprofits who were already receiving single audits could very fairly ask the question, well, what about this? Is this a federal grant? In fact, the FASB, who sets the accounting rules for nonprofit organizations, has indicated that it's appropriate for nonprofits to take the approach that they applied for a Paycheck Protection Program loan, they are styled as loans, with the express intent that it was a forgivable loan that would convert to a grant. And based on that, to recognize grant revenue in anticipation of future forgiveness, assuming they've met their criteria laid out in the loan agreement. That accounting doesn't work for governments, and governments weren't eligible for the Paycheck Protection Program anyway. But for nonprofits, there was certainly a feel like this is sort of a grant. Well, despite that fact, and despite the fact that it was assigned a CFDA number, 2 CFR 200 indicates the Paycheck Protection Program is not subject to the uniform guidance, and therefore we don't have to track allowable costs or have it audited in accordance with a single audit. That's good news to nonprofits who have PPP loans. Now we get to the Coronavirus Relief Fund. This money was provided to the states and to some of the largest counties and cities around the country. So my home county, I live in West Michigan, Kent County received this money directly. There's maybe 4 counties in my home state that got the money directly. Otherwise, most of it went to the state of Michigan for us. Well, that then is going to be divvied up and provided to local units. Every state's handling it differently. Here in Michigan, there's going to be something that's in lieu of revenue sharing. There's going to be some coronavirus relief funds that are provided to help offset public safety expenses and health care costs. Great. What do we do with those? Is it subject to the uniform guidance? Well, the answer, according to beta.sam.gov, is very confusing. It indicates that subparts D and E, that's all the award requirements, everything about financial management, everything about procurement and all those different rules, and federal cost principles, it indicates those don't apply. But it indicates that the audit requirements are applicable, which raises a very fair question. What on earth would an auditor be testing compliance with? Because when we walk through the list of all those items, the 12 compliance requirements, they all come from either Subpart D or Subpart E. That's the only source. Now, in the fine print on the coronavirus relief fund, we're actually told that there's one tiny little provision of Subpart D that is applicable, and that's subrecipient monitoring. Okay, so if my home county of Kent County, Michigan, passes money on to local units in Kent County, we would have to audit their subrecipient monitoring of those funds, but we wouldn't have to monitor any of the money they spent directly. That doesn't make a lot of sense to me. The AICPA has pointed this out to federal agencies. They're looking into it. So that's why I'm saying this is very tentative guidance. As it stands right now, as auditors, you have to go out and audit coronavirus relief funds. I have no idea what you'll be testing because none of the rules apply, and therefore I don't know what you're left with at that point. We'll see. 2 other really big programs were the Education Stabilization Fund, which provides money to schools and colleges, and the Provider Relief Fund, which provides money for especially healthcare, hospitals, and the like. Both of those have indicated that subparts D and E do apply. At least one of them also picks up subpart C. Those are rules for the feds, so it doesn't really matter, and that the single audit does apply. So you can see we have a huge mix. Take off the SBA loans, the next 4 that were listed, Paycheck Protection, Coronavirus Relief, Education Stabilization, and Provider Relief, that's all from one act. That's all from the CARES Act. And the CARES Act isn't the only act out there that provided money. But within one act, we had one funding stream not subject, one partially subject, and 2 completely subject to the uniform guidance. So entities that have been following the uniform guidance and getting an annual single audit, you're probably going to find yourself in great shape. You already had the infrastructure created. Entities that have fallen below the threshold in the past or just weren't getting federal grants and suddenly got $1 million of provider relief funds, that's going to be an issue. They're going to have to build that infrastructure, the financial management systems, the policies and procedures to make sure they can comply with these requirements. And auditors are going to need to very, very carefully document what they find. We were told even before the COVID-19 hit that the OMB felt the audit community could do a better job writing more thoroughly documented and clearly explained findings, not just say they didn't do something, but really get into the weeds and explain the what and the why and the wherefore. Really developing the elements of a finding. So for those auditors who are on the line today, let's make sure we really are very careful, especially in relation to COVID-19 and matters, in the same way that we've been told tentatively that both the CFA and the data collection form will need to separately identify COVID money. I'm expecting that this COVID addendum will also include a rule that the elements of findings will separately identify any COVID-19 funding that's covered by a finding. So, for example, if CARES Act money was added to an existing CFDA number, let's say it was for the National School Lunch Program at a K-12 school, And there was a finding in this year's audit related to the National School Lunch Program. Is that finding something that related to the first 9 months of the year before the pandemic hit, and so it's not COVID related, or is it a finding specifically because of COVID-19? Is it because new policies and procedures weren't put into place timely enough in order to prevent non-compliance issues? Is it something unique to one of the new requirements related to CARES Act money? Audit findings need to spell that out clearly enough for federal agencies to make informed decisions. Let's talk about the OMB's memos. They've issued a number of them, and I'm just going to focus on a couple of them that are the most important. Memo M2017 was issued on the 19th of March, so right at the beginning of the pandemic, and it was set to expire in 90 days, so it actually has now expired. But when it was issued, it provided administrative relief in response to COVID-19. It encouraged federal agencies to please be very flexible in offering no-cost extensions, because we were starting to see a wave across the country of government and nonprofit and higher ed offices closing. It's hard to run a grant when you're not working, so they said, let's be really flexible on that. They provided that initial allowability of salaries that we talked about, that as long as it's consistent with your internal policies and you're doing it for federal and non-federal awards alike, then you may continue to charge people to federal grants even if they're not working, because that's your policy. There were also certain costs that would ordinarily not be allowable, related to cancellations of events and things. And they said, look, if you have to cancel events, if you have to incur penalties, because penalties normally aren't allowable, if there are things like that that you can't avoid because of the pandemic, we're going to allow those costs that we ordinarily wouldn't have. So that was great flexibility. Reporting deadlines for quarterly or monthly reporting, indirect cost rate negotiations, all those were extended. We're told, give people more time, be flexible on dates. This is a serious issue. And then this was handy, all single audit submissions, basically any single audit that hadn't been filed as of that date was given a blanket 6-month extension. Well, single audits already have a 9-month deadline, so that really took us all the way out to 15 months, a year and 3 months after year end. That felt great. People were going to have plenty of time, especially June 30, 2019 year ends that would have been due on March 31st. That was some great breathing room because they were coming right up on their deadline and they were given an extra 6 months. Now, in June of 2020, OMB Memo M2026 came out, and it extended most of the provisions from M2017 because it had expired. It extended most of those out through 9/30, so through September 30. I expect another memo will come to let us know what's coming. They extended the guidance on salaries. They continue to say it's okay to continue to charge federal grants for salaries if it's consistent with your policy, even if people aren't working on stuff. But they did add 2 provisions that were new. One was a requirement to not double dip resources. They said if you get, for example, a nonprofit gets Paycheck Protection Program money, you can't then charge the same dollars, payroll dollars, that you use to get PPP loan forgiveness to a federal grant. It can't be both. If you're charging it to a federal grant, it doesn't count towards PPP loan forgiveness. If it counts for PPP loan forgiveness, it can't count towards a federal grant. You're not going to be able to count the same dollar twice. And they said it's not just limited to PPP, any CARES Act money, that's true. Then there was the comment that really scared people. This is in the memo. It's still officially the rule. We're still waiting for clarification on what it means. It says, because federal resources to respond to COVID-19 are limited, organizations must try to exhaust all other funding sources and reduce operating costs prior to using this flexibility. So yes, you can keep charging your grants. You can keep charging people to the grants if they're not actually working, but only after you've tried everything else first. If there's a way to, and this example is given, lay people off and let the federal unemployment insurance kick in, and that be the way to cover them, then you should have examined that option. If there's a way to use the PPP program instead of your federal grant, you should be looking at that option. We want to try and preserve grants as much as possible. The challenge is defining what constitutes attempting to exhaust all other funding sources and how much are auditors going to be expected to test that. We don't have an answer on that yet. Auditors, stay tuned. I expect the fall supplement, the addendum for COVID-19 will address this specifically, and it may simply be having the auditee make some sort of assertion, some sort of written statement that we made our best efforts, and we'll have to take it at face value. I just don't know the answer there yet. For those of you who got excited about that 6-month delay in your single audits, I'm sorry. As much as auditees loved it, the federal agencies hated it, and the OMB has walked that back. So if your fiscal year end was through 9/30 of last year, you still get an extra 6 months. If your fiscal year end was through 12/31 of last year, you get an extra 3 months. Anybody who has a fiscal year end in 2020, sorry, no extension. So all the extensions will be used up by 12/31. Now, most of us have fiscal year ends that fall on quarters, and so this is pretty straightforward. A fiscal year end in September 30 of 19 that would have been due in June of the following year. Now it's 6 months, it's due in December. A fiscal year end of 12/31 would have been due in 9 months, plus you get an extra 3 years, that's due in December. That's great. But these rules actually made it so that the people with the off fiscal year ends, the fiscal year ends in November or the fiscal year ends in August, you may actually have less time to file yours than your neighbor who had a fiscal year end before you. It's very strange. So make sure you look up your actual fiscal year end. For most of us, it's not going to be a big deal, but these extensions, the blanket 6 month is gone except for 2019 9/30 and prior. So just be aware of that. All right, CPE prompt 6. This is our final prompt. We have just a couple slides after this one. We're at our 100-minute mark, I see. When would a June 30, 2020 fiscal year end single audit be due? Would it be due December of this year in 6 months, March of next year in 9 months, June of next year in 12 months, or is none of those the correct answer? When do you think a June 30 year end is going to have their single audit due? Well, I told you that all the extensions expire by 12/31 of this year, but the normal 9-month rule continues. So they're not due December 31st. That's good news. The normal 9-month deadline would fall on March 31st of 2021. There's no extension, no extra, so it would not be June 30th, 2021. Although some of you who are purists want the answer to be exactly right. And so none of the above actually is probably technically true, because it's actually due the sooner of 30 days after the audit is completed or 9 months after year end. So the latest deadline would be March 31st, 2021. That's B. But technically the correct answer is D, because if you get your audit done sooner than that, it's due to the Federal Clearinghouse within 30 days of that date. All right, let's talk about the data collection form for just a few seconds. It's required for all single audits. They are normally due 9 months after year end or 30 days after receipt of the audit report, whichever comes first. Do note that memo M2026 that we just talked about. If you file the single audit late, and I don't mean late, if you file it within the extended deadline, if you need to use more than the 9 months, you are supposed to note in the filing that it was late due to COVID-19. The extension is supposed to be tied to that, and so they want you to specifically say somewhere in the report. Right now, there's not a lot of clear guidance on where that would go, so somewhere in the report indicate this is being filed late and it's because of COVID-19. It's submitted electronically. It's a PDF. It's an unlocked, unsecured PDF. It's text searchable. It is publicly available. People can download and look at your reports. So make sure that everything is in good shape there, and they can't be scanned documents, although you can have a few scanned pages. Like 75% of the content has to be text searchable. If you're an Indian tribe and have confidential financial information from like a gaming operation, you can still check the box to keep it from being publicly available, but the rest of the rules apply to you as well. These need to be certified by both the auditor and the auditee and uploaded. Website is currently accepting really old submissions. If you didn't get your audit done from 2011 and need to go back and make some amends, it's still technically an option up through fiscal 2021. There have been some operating delays in trying to process application or process data collection forms. So just realize that they will be logged when they were received, but because of how much of a backlog happened while the clearinghouse was closed, there has been much longer than normal delay in receiving and acknowledging those receipts. Some changes that were made last year to the data collection form included more data validation, making sure people are typing in their employer identification numbers and DUNS numbers properly. We added a lot more text fields to single audits, so the actual notes to the CIFA are now being copied and pasted into the web form. The specific details of each individual federal award finding are now being copied and pasted directly into the web form. Whether or not a finding is a repeat finding from the prior year is a checkbox. The text of the corrective action plan is being put in. The reason for all of this is even though the PDFs are text searchable, all of those data fields that we've been filling out for the last year go into a database that is now searchable and can be queried. So you could actually do a search online for, tell me entities that had findings related to this program that included the keyword eligibility. And that would actually let you download a report that has the text of all those findings without having to go to the PDFs and flip through all the pages. So the PDFs still provide value, but this allows for certain kinds of data analysis, and that's what they were trying to accomplish last year. It seems to be doing what they wanted because they have not made any change to that. It does not sound like they're going to make a change to have a checkbox or a field for COVID-19. So the current tentative guidance for how we're going to separately identify COVID-19 awards is in the field where you give the name of the program. The first characters should be COVID-19, and then the name of the program. And so they're going to be able to text query, does it contain COVID-19 at the beginning of the field? If that changes, I'm sure it'll be noted in the compliance supplement addendum when that comes out. And now very briefly, the new Yellow Book has finally become effective. It kicks in for fiscal years ending June 30, 2020. We weren't able to implement it earlier, so now is the first time it's becoming effective, although we do have to look back at any non-audit services that have been provided over the last year. So in a way, it's sort of been effective since July 1st of 2019. The major changes, it's been reorganized. It has a new format. They did tighten up some of the rules on threats to independence. For many, many firms, this did not mean there was no meaningful change here, but just realize if a CPA firm assists in drafting financial statements, now that can be the drafting the notes, it can be taking the trial balance and putting it in the format of financial statements. That's perfectly allowable, but that is considered a significant threat to an auditor's independence. All that means is they have to document which safeguards are being followed, and the primary safeguard is usually going to be providing drafts to management, asking them to review those drafts, and documenting that management has the necessary skills, knowledge, or experience to meaningfully take responsibility for those statements. Not a huge change, but it does mean that auditors will need to button up their documentation. If they were taking the out under the old rules of saying it was a threat but not a significant threat, that's gone. Now it's always considered significant. You can still do it, you just have to document how. Auditor CPE rules have been actually relaxed more than anything else. The number of hours are the same, but they were a little broader on what sorts of things qualify. So if you're an auditor, under these new rules, the CPE kicks in now in July. Start looking at those and make sure that you're taking credit for what you can there. Peer review rules have been simplified. If you participate in the AICPA peer review program, which most CPA firms do, then the Yellow Book just says do what they do and don't worry about it. If you're a government agency and you're not participating in the AICPA system, there are specific peer review rules for you to follow. The rules on waste and abuse have been backpedaled a little bit. The audit community had some struggles with this. It's a very subjective term. And so now if an auditor, first of all, auditors are not required to look for waste or abuse, but if they stumble across it, auditors are now encouraged to look at the systemic cause. Is there a control deficiency that allowed wasteful spending or abusive spending to occur? The focus is now less on reporting the waste and abuse itself and more on reporting the control deficiency that gave rise to it. And if you're performing not audits, but reviews or performance audits, there's new chapters and special guidance in the Yellow Book for those. So where do you go to learn more? Unfortunately, there's not a great single spot on the federal websites to find everything. So I'm going to encourage you to start with the AICPA's Single Audit Resource Center. If you go to aicpa.org, interest areas, government audit quality, there's one-stop shopping where they have links to a lot of other places, including some of the links that are here. You can get the new OMB compliance supplement when it's published at the Office of Federal Financial Management's website. You're welcome to go there now and get a copy of last year's, but there's nothing there yet, or at least there wasn't as of this morning before we started taping this. Hopefully it's coming out this week, so stay tuned. The CFO Council has taken over for the COFAR as the federal agency that keeps uniform guidance information. If you go to cfo.gov/policies and guidance, you can find information on a number of topics, including frequently asked questions with these OMB memos that we were talking about, and some other general uniform guidance best practices. The website for data collection form and the yellow book are also listed here as resources for you as well. Well, with that, we have gone past our 100 minutes. Hopefully we gave you some good information on what's new. I wish we had the new compliance supplement that could share everything in final, but stay tuned for further updates in the future, and we'll try to keep you all informed.